AI can build your investment plan, manage your risk, and adjust your portfolio without you having to talk to a single person. Some people are calling it a replacement for financial advisors. But that's only part of the story. A lot of people today are looking for smarter ways to handle their money. Instead of booking a meeting with a traditional advisor, they're opening apps and using AI tools that give financial help in minutes. These tools are cheaper, faster, and don't need a schedule. In this video, you'll learn how AI is changing the world of financial advice, what it's good at, where it still has limits, and who can benefit most from using it. Let's start with what traditional financial advisors do. A financial advisor is someone who helps you make decisions about your money. That includes building a portfolio, planning for retirement, managing taxes, and setting savings goals. They usually ask questions about your age, income, job, family, and future goals. Then they give you a plan based on that information. A good advisor also explains risks, helps you stay calm during market drops, and reminds you to focus on long-term results. They give more than just numbers. They give emotional support when things get hard. But working with a financial advisor is not cheap. Many of them charge about 1% of the money you invest with them. That means if you invest $100,000, you pay about $1,000 every year. And that fee keeps growing as your money grows. For people just starting out, this can feel too expensive. Also, setting up meetings and waiting for answers takes time. And that's where robo-advisors came in. These are online platforms that started after the 2008 financial crisis. The goal was to offer financial planning at a lower price. Instead of talking to a person, you answer questions in the app. Based on your answers, the system builds a simple investment plan. Some of the most popular robo-advisors are Betterment and Wealthfront. They use computer algorithms to manage your money. They rebalance your portfolio when needed and adjust your risk level based on your goals. Robo-advisors are much cheaper than human advisors. Most charge less than 0.5% each year. Some even offer free services if you only need the basics. They're also easy to use. You can start with a small amount of money, and the app does most of the work for you. You don't need to study the market or call someone every time you want to make a change. But robo-advisors have limits. The advice they give is usually the same for many people with similar answers. They don't know your full financial story. They can't help with taxes in detail or tell you what to do if your situation is complicated. And when the market drops and you're scared, the app can't give you a real conversation or a feeling of trust. Now we're seeing something new. AI tools are going beyond simple robo-advisors. They're not just following rules. They're learning from large amounts of data. These tools use machine learning, which means they study past data to find patterns. Then they use those patterns to give smarter advice. Some tools can run tests called back testing, where they check how a plan would have worked in past market events. It lets users test different strategies using real historical data. That way, you're not guessing. You're seeing real examples of how your plan could hold up during events like market crashes or inflation spikes. Another tool, Savology, builds full financial plans using AI. You connect your accounts and it creates a personalized plan based on your income, spending, and goals. It updates automatically when your numbers change. Some AI tools are now looking at behavior too. They notice how people react when the market goes up or down. If someone always sells when the market drops, the AI might adjust the plan to help reduce risk and protect the user from making emotional decisions. This is something that used to require a human advisor, but now AI can do parts of it by studying patterns. So where does AI do well? AI tools are much cheaper. That means more people can access financial help without needing a big account. Many apps offer full services for under $100 a year. Some are even free for small users. AI is also available all the time. You don't have to wait for business hours. You can make changes in the middle of the night if you need to. AI also makes decisions based on logic, not emotion. It follows data, not fear. That can help users avoid bad choices during times of stress. And finally, AI tools can give more personalized advice than older robo-advisors. They look at more data points and adjust more often, which makes the results closer to what a human might give. But there are still things only a human can do well. Some financial needs are complex. If you're self-employed, have different income sources, or need help with taxes, AI might not have the full picture. It can't always understand new tax laws or legal rules in your country. It also doesn't know your family situation or personal values unless you tell it everything in the right way. That's hard to do with just a few questions. Estate planning is another area where human advisors are better. If you need to pass wealth to your kids, set up a trust, or give to charity, there are many details that change based on your location, family setup, and goals. A human advisor can ask follow-up questions and notice things that AI might miss. The biggest difference is the emotional support. During a market crash, many people feel scared and want to sell everything. A good advisor helps you stay calm and reminds you of your long-term plan. They talk you through your fear. AI can show you a chart, but it can't replace the feeling of someone listening and helping in the moment. That's why many companies now use a mix of both. This is called a hybrid model. In these setups, AI does the daily tasks, it tracks changes, updates the plan, and gives reminders. Then a human advisor steps in when things get more complicated. For example, the AI can send alerts or answer basic questions through a chatbot. If the question is too complex, it sends the user to a real person. Some firms are even using AI to support advisors. The AI reads client data and gives suggestions. The advisor then reviews those suggestions and makes the final decision. This saves time and helps advisors focus on the things AI can't do. One interesting trend is the use of tools like ChatGPT to answer common questions. For example, a user might ask how to increase their savings or reduce debt. The AI gives a quick answer based on financial principles. Then the user decides if they want to take action or talk to a real person for more help. These systems aren't giving full advice. They're helping people learn, plan, and prepare before making big choices. So where does all this lead? AI isn't fully replacing financial advisors, but it is changing how people get financial help. It's making planning easier for new users, young investors, and people who like to manage things on their own. It's helping advisors work faster and serve more clients. It's also creating new options for people who couldn't afford advice before. If you're someone who wants control over your money, likes using tech, and doesn't need help with legal or tax issues, AI can be a great fit. If your situation is more complex or emotional, a human advisor still has real value. In many cases, using both will give you the best result. You get fast updates from the AI and deeper support from a person when it really matters. Finance is changing fast. Tools that used to be only for the rich are now available to almost everyone. And while AI won't replace every advisor, it is creating a new kind of financial support, one that's always learning, always improving, and ready whenever you are. If you want to see the best AI tools for investing, saving, and planning, check the links in the description. And if you found this interesting or helpful, don't forget to like and subscribe for more videos like this.